How to trade the NFP? The NFP are coming today. And the question is probably, should you long or short the gold? Should you long or short the US dollar? Well, to be honest, you cannot predict anything. Even if you enter a trade few seconds before, you will never know if it's gonna be up or down. You cannot predict, and even the big bigs cannot. However, you can prepare the NFP like a professional, and this is what I'm gonna share with you today. So, first of all, you're gonna check the event calendar. This is very basic, but you're gonna check the forecast and the previews. For example, the forecast from Prime Terminal is 91K. Okay, the previous one is 57. So it should be up. Okay, it should be higher. However, it will depend on the official data. But let's be honest, the economic event calendar alone, it's useless. I know that most of you only check the event calendar on the chart. But if you only use a chart here and the event calendar, you're missing the bigger picture. You don't know anything. You don't know if something else is taking advantage of it or not, such as, for example, the unemployment rate. Because today is not only about the NFP, but you have the unemployment rate as well, and you don't know it. And that's why I'm going to share with you my full process. So, quick breakdown, okay, what the NFP. I know that most of you heard about the NFP. Oh, okay, this Friday we have the NFP. This is the first Friday of the month, blah, 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 blah. Okay, this is very basic, but what the NFP? What the impact on the economy? You need to know that, right? So the NFP is a report that indicates the total number of newly created jobs in the US economy during a specific month, excluding employment in agriculture, military, intelligence services, self-employed individual, and private household. Okay, report is broken into 8 aggregate industry, blah, blah, blah. Okay, this is important. Employment is a key driver of economic growth. Makes sense. As the labor market affects consumer spending, which drive a significant portion of economic activity. Yeah, if you have a job, you have more money to spend. So if you have more money to spend, this is good for the growth. Makes sense. Federal Reserve use employment data as part of its decision-making process, and along with its 2%, okay, the famous 2% target in inflation, considers maximum employment its primary goal. Thus, NFP report has significant impact on monetary policy decision. We'll talk about it later, but some officials talk about the NFP. Of course, because the labor market is definitely important for the monetary policy. So, first of all, we need to better understand what happened the previous month. Okay, what was the NFP data before? So, for example, you have the date here. So the previous one was 57, sorry. K, 129, 148, 214, minus 158. You got a minus 17 here. So we got some revision here as well, okay, in June, and we'll talk about it later. But you can also check the economic data chart to just better understand that now we got this peak, okay, the peak was around 200 something, okay, 214 here, okay. And now we have this kind of downtrend. Well, this is, very, very simple. Now it's gonna be a bit more complex because inside Prime Terminal, you can access the preview. So you need to prepare the NFP by checking the previous data, but by also understanding what, let's say, some officials said about it. What are the different expectations? What the June revision? What the latest ADP data? Sure, the ADP employment data is not like the big one, but still it can get an impact on the NFP, even if you don't have like a strong correlation, right? So this is a preview, okay? Has been published like yesterday night on Prime Terminal inside the real-time headlines. It's very basic. You can check it out. You have the summary, okay? So you better understand the situation. You have the expectation, and you have, for example, a general revision. Analysts at Barclays. So they talk about what the big bank think. They mention Barclays. So they say for the general revision that analysts at Barclays have flagged the potential for revision to the June data, noting that the June payroll figure was based on barely half the usual survey response, and that the BLS relied on modeling rather than actually report data. The BLS is the one who published the NFP, right? Through the bank isn't clear as to what direction the revision will go. Still, Barclays suggests revision will likely be large. We're talking about the June revision, right? This is what happened with the wage, the ADP, the claim data, the business survey, the consumer confidence. I said before that consumer spending is part of it. So if people don't really trust the economy, if the confidence is, let's say, dropping, people are not really willing to pay more, to spend more money. They're a bit afraid, So they're about, let's say, a bit more conservative. And you have the Fed policy here. So this is more about what the official said. So for example, you know that Chair Kevin Walsh called it solid and steady, okay, for the labor market rate. And Logan said it was solid and strengthening slightly. Schmidt saw it rolling balance. Then you have Paulson and Hamag, blah, 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 blah. Okay, so you know definitely what the official said and thought about the labor market at that time. And those officials will definitely check the NFP report as well, the unemployment rate as well. I mentioned the unemployment rate, but we are mainly focused on the NFP now. So they will check it out as well. And that's why as a trader, you can go deeper because you can also get access to the bank view. Just imagine, you know what the big bank think about it. So this is, for example, the economic focus from the KAKIB. And they are talking about the July employment preview, stabilization, but no re-acceleration. So for them, there is no re-acceleration. Now, if you go a bit deeper as well, and you want to better understand the situation itself, they expect July to improve slightly compared to last month, but remain below the March-May period, consistent with stabilization, but no re-acceleration. So what does it mean? What the figures? Because you want the figure. Well, the figure is here, 75K in July. So you know that the KAKIB, okay, expect the NFP to be at 75, which is below the forecast. You remember the forecast on prime terminal is 91. For most of different forecasts, it's 80, right? So this is below the forecast. So this is for the KAKIB. Okay, of course, you can go deeper with the average hourly earning, the unemployment rate as well. They talk about it, blah, blah, but we mainly focus on the NFP in this video. You also have this research from MUFG published this morning, right? You have the key risk given in the US, which is the NFP again. And they say that the market's consensus expects an 80K increase, which is up from June 57 print. We know it. But they say something quite interesting. The global team forecast a 125K rise, as they see that the industry, leisure, and hospitality sector may have been an upsample in June, increasing the likelihood of a significant upward revision. If this is true, let's say, if the NFP is, at the end of the day, around 125K, the US dollar will be impacted. Makes sense. But quick comparison, the KAKIB, it's below the forecast. MUFG, it's above the forecast. You have a quick division. You have two different opinions. And that's why reading those bank research definitely help you to better understand what the big bank think about it. And all, even this professional have different views about the NFP, right? So this is a quick, table about it. So the KAKIB expect 75, MUFG 125, ENG 70. So if you check, MUFG is the only one above the forecast. For KAKIB and ENG, it's below. That's it. Now, how do you trade the scenario desk? So you have the bank view first, then you can switch to the scenario desk. So this is a trading tool inside Prime Terminal, which definitely helps you to better understand what you can trade, okay? Because now you understand the NFP, you understand what the big bank think about it. So now you want to execute. You want to know if the impact will be big or not at all, if it's really worth it to trade the NFP or not. So for that, you have the scenario desk for the US job report, okay? And if we only look at the summary, you have some explanation again about the NFP. So for example, Bloomberg consensus project headline non-farm payroll to print at 88. So as you can see, 88 for Bloomberg, 80 for other ones such as MUFG, 91 for Prime Terminal, all this kind of stuff, okay? So you have different forecasts, right? And above all, they say that Barclays expect the report to keep the FOMC on the old path with official assess whether additional tightening is needed, meaning this print lands as one of the last major inputs before the Fed's next meeting. Yeah, of course, next week we also have the CPI, right? But we only talk about the NFP, and that's why it's going to be a good one. So you have two different scenarios. You have the strengthening and weakening scenario. The strengthening scenario for today is, okay, the NFP comes out, yeah, let's say 140K or higher. If it's above or at 140K, it's going to be bullish for the US dollar. If the unemployment rate is at 4.1 or lower, it's going to be bullish for the US dollar. For the average earning year over year is 3.6 or higher. For the average earning month over month is 0.3 or higher. And as written in this scenario, USD trend is likely as a payroll beat alongside a lower unemployment rate and firmer wage growth will reduce the case for near-term Fed easing. We're back with the monetary policy again. So this is for the strengthening scenario. For the weakening scenario, is different. The NFP is 50K or lower, okay? For the unemployment rate is 4.3 or higher. The average earning year over year is 3.4 or lower, and the average earning month over month is 0.2 or lower. And in this case, you have some USD weakness. So this is what you can expect, okay? This is a kind of process I use to trade, okay, the NFP. Now, if you go inside Prime Terminal, so this is a preview, right? This is the one I show you, but you can search for it inside the real-time headline because you have a lot of information. And a few minutes ago, we also got a quick, let's say, information that Trump said, okay, that Wash is doing something good, okay? He said that I think he's great, but I won't be criticizing him because he got some question about what Kevin Wash is doing now and if he could hike ahead of the midterm. You know what the midterm, right? It's coming very soon. And if you remember, Kevin Wash is now the governor. Powell is not here anymore. And who decide? Trump. That's why it's very, very important. And also why, if you want to trade the NFP, I use a specific template for that, okay, called the event trade. You can copy mine, right? You have the real-time line, you have the chart, so you can use this 5-minute chart, whatever, okay? And you can also check the event calendar, the scenario desk, and above all, you need to turn on the live market squawk. You just have to connect the live market squawk to listen to the data. If you want to react fast, to trade the NFP, you need to use this trading tool. You cannot only watch the chart because it's already too late. You need to get the information as soon as possible and execute the trade. If you know how to interpret it, and that's why I show you my process with the the scenario desk, the strengthening and weakening scenario, the real-time line, the preview, the bank research, and all this kind of stuff. So this is basically my process to trade the NFP. You can definitely do the same. Again, it's all about the interpretation. Sometimes those kind of data are definitely worth it. Sometimes not really. Really depends of the final data itself, if it's part of the strengthening scenario or weakening scenario, or maybe it's not. And if it's not, you don't have to take any trade, but you have to assess the situation. You have to better understand what does it mean for the economy, what could be the impact, let's say, for the next Federal Reserve decision. Because inside Prime Terminal, you can also check the interest rate probability. So for example, you can check for the Federal Reserve. Right now, the market is pricing a 54% probability that the Federal Reserve will hike rate on the next meeting in September. Everything can change with the labor market and next week's CPI. So that's why trading is all about understanding the context. Context is everything. So again, if you want to access to Prime Terminal, I put the link in the description. You can enjoy a 7 days free trial. And again, if you have any question and if you want to learn real trading, I put all the link in the description to learn with me. So again, be careful with the NFP. Again and again, you cannot predict anything. You cannot predict what the NFP will be. Even the big banks cannot. As you can see, they have different opinion about it. So yeah, this is real trading. And again, don't forget to subscribe.